Welcome back. Today you might be wondering, okay, I've heard that taxes could go up in 3 years, could go up in the year 2025. Is that true? Are taxes actually going to be going up? And what does that mean for you as a taxpayer? Well, today we're going to dive into that. But first, I'm Robert Martin. I'm the president and founder here at Zenith Retirement Planning, and I'm also a chartered financial consultant. With that said, let's dive into it. Now, when we talk about the taxes going up in 3 years, what everyone's actually referring to is this thing that was passed in 2017 called the Tax Cuts and Jobs Act. It was passed through the Trump administration, and it did many things. It changed how you file your taxes to make it much simpler, and that caused many people to change from filing with itemized deductions to standard deductions. It changed the corporate tax rate. It changed a lot of things for businesses. But the primary thing it did was change the tax rate. So actually in 2017, your tax rates actually went down. And so we saw the highest tax bracket of 39.6 in 2017 drop to 37% in 2018. We saw the 33 drop to 32, 28 to 24, 25 to 22, 15 to 12. And the catch is, this doesn't last forever. In fact, when they passed the Tax Cuts and Jobs Act that made all the taxes less, they set an expiration on that law. And so it's automatically set to sunset, as they call it, or expire in 2025. So that means January of 2026 is when taxes will go back to what they were before 2018. So that means in 2017. So in January of 2026, you're going to see the 12% go up to the 15%. You're going to see the 22 go up to 25, and the 24 up to 28, and a 32 to 33, and a 37 to 39.6. Now, if we look back historically at tax rates, we'd see in the past that taxes have actually been all over the place. And so this is how we gauge, okay, we know taxes are going to go up, but what does it actually mean? Does it mean taxes are going to be higher than they normally are? Are they less than what they normally are now? Well, to answer that question, we need to go back to 1913, when the highest marginal tax rate was 6%. Just 6%. In fact, we started collecting taxes earlier than that as an effort to fund the Civil War, and we kept doing it. Now, decades later, in 1952, the highest tax bracket was 92%, and it stayed between 70 and 90% for decades until the Reagan administration came through, passed tax reform, and then over time, numerous presidencies and tax laws were passed. And today, in 2023, we're at 37%. The average has been 58%. So what that means is if our highest tax bracket was 58%, that means we're in a normal tax environment. That would be a normal amount. 37% being the highest means we're in a low tax rate environment where taxes are actually historically low. Okay, very low. Some of the lowest we've ever had in history. But in 2026, which is in about 3 years, taxes will go up. And there's no saying how high they could go. Now, the question that I often get asked is, well, what if the political environment changes? And it's a really good question. And to answer that, what we've seen already, back in 2021, our President Biden tried to pass a tax law that would increase the highest tax bracket from 37% to 39.6%. The question I have for that is, why would he try and increase tax rates if that was already going to happen automatically in 2026? And I believe the answer is because the government needs money. Now, if we're in a Republican environment in 2026, then we possibly could see the tax law be extended. However, there are no guarantees either way. As of right now, it's set to expire. So with that said, it's really important that in the next 3 years, where taxes are some of the cheapest that they've ever been, that you work with your accountant, you work with your financial planner, you work with your tax consultant to plan around this period where you can possibly capture some cheaper tax rates than they will be in 3 years. You can go discount shopping, as it may be. Maybe take some money out of your IRAs before you pay higher taxes in the future in the form of regular distributions, in the form of Roth IRA conversions, which I have another video on if you want to watch that. And then besides that, the Tax Cuts and Jobs Act did do many things. A lot of it outside the scope of this video. So I will be posting another video on those changes specifically for business owners. And with that said, it's always a pleasure educating y'all. If you have any questions or comments, please drop them below. If you didn't like the video, give us a thumbs down so we can improve ourselves. If you liked the video, give us a thumbs up. Either way, subscribe so you can learn more in the future and get access to our videos in the future immediately as they post. With that said, take it easy and we'll be talking to you soon.